Welcome to today's AFSA Business Partner webinar, Future-Proofing the Leasing Industry, Addressing the EV Residual Value Challenge. My name is Grace McGurn, and I'm the Communications Manager for AFSA, and we are pleased to have you with us today. Today's webinar is sponsored by NetSol. NetSol is a highly engaged AFSA Premier business partner, and we greatly appreciate their support. Your presenters today are Eva Kellershoff, Vice President of Sales, North America and Europe, and Eric Wagner, Chief Marketing Officer. A couple housekeeping items. Your mics and cameras have been disabled to ensure there are no disruptions. The webinar is being recorded and will be available to view on our website next week. If you have any questions, please post them in the chat. We hope you enjoy the webinar, and now I turn it over to Eva and Eric.
Hello, and welcome to Futureproofing the Leasing Industry, Addressing the EV Residual Value Challenge. My name's Eric, and I'm the CMO at NetSol Technologies, and I'll be acting as the moderator for today's webinar. Joining me today is Eva. Eva, if you wouldn't mind switching to the next slide there. She's the Vice President of Sales for North America and Europe. So it gets lagging a little bit. There it is. Eva also serves as the advisor at Way.com and a non-executive director at Elaine. Eva has over 2 decades of leadership experience within the automotive industry. Thank you so much for joining us today, Eva.
Hello, Eric. I'm super excited to be here.
Awesome. But before we get started, I have a bit of housekeeping to take care of to set the stage. I want to first start with introducing NetSol to those of you who are unfamiliar with us. NetSol has served OEMs, their captives, and dealership groups with business-critical, future-proof retail and finance technology since 1995. The company was founded by 3 brothers who went on to IPO the company on the NASDAQ in 1998. We've been providing asset finance solutions and professional services for the entirety of our history. And today we can safely say that we've sold over $1 billion in software. We've worked with over 50 auto companies, and we've managed a portfolio of over 500 billion. Our many decades of experience in asset finance has given us a huge competitive advantage. We have more data, experience, and successes than anyone else in the space. And this data and experience gives us invaluable insights. We're able to see trends, opportunities, and disruptions unlike anyone else because of it. For instance, we could see major changes in the buying and usage behavior of consumers over the last 5 years. And as a result, we leveraged our knowledge, experience, and that data to launch our new digital retail platform over 3 years ago. We wanted to address the demand for mobility and digital retail that we knew would come in the near future. So with that, I'll kick it over to you, Eva. What's the topic of the day?
Yeah, very good question. It is actually addressing the EV residual value challenge. And so to kind of set the stage, we also want to start with, where's the market of electrification today? So let's start. We're looking at EV sales to start off with, and we see them in a steady climb. And it's looking very bright. When you look at the CAGR of 55% since 2021, the market share has risen to somewhere around 11% as of last year, steadily increasing. We're topping now more than 1 million vehicles sold in 2023, and the trend is upwards. Additionally, it's helping that, of course, the government is behind it with the IRA, with subsidies for new and used vehicles and infrastructure and so on. So one could say it's looking very bright. However, when you look back at the projections that were done across the board since 2020 or back in the year 2020, the predictions were much, much more substantial in terms of adoption. So something in the area of like 6.9 million units by 2025. And certainly, and that's clear between not only the 2 of us, but I think across the industry, that number is way too far out. So 1.2, maybe next year, 1.5 millions. Overall, the predictions have been massive. What has now, what has been going on in the market? What are the factors that has been that made sure that the demand lagged somewhat, and we want to explore that first before diving into the residual value topic. Now, there are a couple of them that impacted that adoption and turned it actually into a slow pace. Now, to quote Mercedes CEO Ola Kalenius, he says, variable cost parity between EVs and traditional cars is many years away. And we see today, for instance, in the compact SUV range, which is probably one of the largest gaps, the 32% price gap really makes it hard for customers to have a similar adoption in the ICE space as in the EV space. So we're looking at a price difference between a $35,000 car in the ICE or in the ICE space and a $53,000 electric vehicle. Across the board, of course, it's 42%, which is even higher, but that is, of course, impacted by the fact that we're starting the EVs coming through top lines, through luxury vehicles, etc. So that adoption is only slowly moving forward. Second topic is the total cost of ownership, where in the very early beginnings, you probably might recall, Eric, you as well, that there was always this massive, let's wait for the TCO to swap over, because in the event, maintenance, taxes, fuel costs or charging costs will always outbalance the massive asset costs. But turns out that, something like insurance premiums are now rising much, much higher for EVs than for ICE vehicles. They rose about 40% since 2021. Another couple of factors are the long spare parts wait times, or the lack of skilled mechanics to repair these vehicles. And as a result, insurance brokers or insurance carriers have adopted much higher scrapping rates throughout the last couple of years. And there's one other issue that sometimes is overlooked, which is that, that EV driving is really a new way of driving. You see that massive acceleration that is coming through that car, and people aren't just not, used to it or having a lot more fun with it. And that, of course, is also producing a lot more accidents. And then the practicality issue that is always cited, it's the range anxiety and it's the infrastructure topic. And it's kind of a chicken and an egg problem. For those who want to do a couple of annual long trips, it's for them the prohibitive thing that keeps them from buying an EV. And then we see also somewhat of an asymmetry between the demand of urbanites versus the rural ones, where, in the rural areas, you probably need more like fast charging networks, whereas in cities, you look for, non-residential and residential charging opportunities. And that's a topic that's still kind of spurring the debate today. And then you see also a lack of standardization in terms of chargers. And then topping that, all these factors off with the topic of government EV subsidies that have been somewhat erratic over time. And, whether it's the policy, the political leaning that drives policies and drives the move towards adoption, or whether it's the lack of a budget, all these topics are not really reinforcing customer confidence, and that's why you have somewhat of a problem that leads to a lower EV adoption overall.
Wow, it sounds like a lot of challenges.
That is correct, but I think there's also some brighter outlook overall, because some of those issues are actually on the mend. So when you look at the used markets for EV, you see a lot more affordable inventory coming up. So nowadays, almost 60% of the inventory is priced under 30K, under the 30K range. We've seen a growth of like 3x at the under 30K range of the last 3 years, and of almost 3x also in the range of under 25,000 vehicles. And that also means that on the new car side, we've seen a lot more adoption or a lot more offering in the desired model range and in lower pricing segments, and they're all becoming available now. So that's a good and good outlook for consumers these days. At the same time, the TCO topic is also being somewhat arranged by a supply chain that's now fully restored, MSRP prices that decrease over time and not only in the same model range as we're also going to discuss later on. But it's also the topic of the experience with the acceleration is widening, and therefore the rate of accidents is therefore dropping a little bit. And then the practicality issue is also being on the mend with the IRA investing a lot into the infrastructure, and Tesla is kind of also being very friendly to other OEMs and attacking the standardization in the industry in terms of plugs of those chargers, and that gives, I think, a lot more confidence also to the Ford users and whatnot in that world who want to have an access to the Tesla's supercharger network, for instance. And still, the government EV subsidy policy remains somewhat of a question mark because it's really hard to predict the future in that regard. But a little bit more consistency, I think, would also create a lot of confidence on the consumer side. All right, let's now look at the key drivers of residual value depreciation. What is actually impacting what is going to be on a bank's books or whoever is holding the portfolio. Now, it is a lot more complex than what you were seeing in the age of the ICE vehicle. So mileage and age is also affecting the EV, of course, because the more a car is driven, the less it is worth. And this holds true for EVs alike, where higher mileage and older age also contribute to faster depreciation. Second is the battery health and maintenance topic. All of a sudden, we have a huge aggregate in the vehicle that is impacting its resale value. So the battery condition significantly impacts the EV value. And when cars are charged primarily at a fast charging network of stations, they may experience a quicker battery degradation and therefore affecting that resale value. On the other hand, we've already discussed it, the government incentives are creating a big impact in the way that the day you accept the government incentive, that value of the car is immediately going down by the amount of subsidy, because that is baked into the cake when you sell the vehicle again, of course. And then brand reputation and technology. I mean, the better an OEM is or a brand is at pushing technology, at continuous software updates, etc., like what we've seen with Tesla, the more it is also able to stabilize its prices. So that's a good point. But we always come back to the topic of vehicle pricing and demand. On the one hand, Tesla is very good at pushing out software updates and making it really a desirable model. On the other hand, you're constantly adjusting the price in the existing model, not just on the next facelift or the next model cycle, is really pushing resale values down. And as a result of that, we've seen a lot of impact in the resale value of these EVs. And of course, the demand, as we've seen on the previous slide, is also quite pushing the value of that. So, in overall, the topic is how can we now, with all of these factors coming in, helping those that hold these portfolios and create somewhat of a risk mitigation scenario and come up with measures that would help those who hold these assets. As we've seen, when you have cars on the books, what are you going to do with them? On the other hand, the EV sales that need to be, or let's say the EVs that have been produced still need to be pushed into the market because, of course, when in 2020, predictions said, well, the market is going to absorb 6 million units. And now it's only 1 million. What are you doing with the rest? You can't just, scrap them. Of course not. You have to create incentives in the market to have at least somewhat of a higher adoption than there would be without the incentivization. So what we've seen since the end of 2022, the middle of 2022, is a sharp uptick in leasing rates, because that's what the OEM do. They go to their captives and to their allied independent financial services providers and go, can you please help us? Can you create some attractive leasing rates and try push these cars out of the door? So that's what we've seen, almost a doubling in leasing uptake, in leasing rates, leasing penetration rates, both on the BEV side as well as on the PHEV side. But as I explained on the previous slide, the sharp decline of these residual values, see an average BEVs decline even 31% from the year before, whereas petrol and diesel cars almost stayed the same. And we now face a price parity between hybrids, BEVs, and ICE vehicles, even though the price gap was so much bigger when they were still new. All of these factors are now putting captives and independent financial services companies into a squeeze, because yes, they have to support the sales, but on the other hand, they're getting hit by an asset impairment in their books. And so if you're a captive today, then what are the options that you have to choose from? So let's have a look at how to solutionize the problem, as we say in the IT industry. One is a more, let's say, medium and long-term remedy. And that's something that the OEM, of course, is coming up. They're pivoting. They're pivoting their product strategy towards a more, hybridized to a more ICE heavy product portfolio. But this is only a remedy in, let's say, the medium and long term, because it takes a while to kind of bring that tanker back into a different line and into a different path. In the meantime, you want to have these vehicles sold, and we want to have them on the streets, the ones that have been produced. And on the other hand, we also see some companies that are actually doubling down on their current product portfolio and their current product strategies. So we have to look at other strategies that mitigate the risk of EV residual value depreciation. So one thing is to look at the asset itself, but there are also other risks that we can, let's say, limit by looking at the life cycle of an asset in your accounting system. First of all, on the origination side, you can do a much better job by deploying AI-enhanced pre-screenings and pre-approvals through data analytics and a 360-degree customer mapping. Another one is deploying predictive pricing analytics to offer tailored rates, alternative offers, and upselling, meaning you have to create more profitability through the asset itself than just by selling the asset in the standardized way. Use digital retailing in a very refined way, and all the areas of dynamic pricing and so on. Another one is to do cherry picking and make some buyback agreements with the OEMs. And of course, the oldest tricks in the books are always like, be very collaborative with your OEM and with your dealers to kind of do some participation in risk sharing, something that has been part of the strategic option set for so many years, also during times when ICEs have experienced a drop in resale value. The next one is, of course, servicing operations. So during that time when you have your asset in the book, you can deploy certain strategies that will make it a little bit more interesting for the asset to remain in your book, meaning how can you squeeze more out of the asset? You can start actively managing it. Some say it's the next best channel. Some call it active asset management approach. But in order to be able to do that, you have to have a very comprehensive portfolio of data at your disposition. And we're just going to have a look at that on one of the next slides. Of course, you have to also enhance your stress test framework with business-specific KPIs, and another way of doing or having a better real-time view on your assets is, deploy some other telemetry data and telemetry extraction and analysis through, in-life vehicle inspections and all these things that are now available to you now that you have somewhat of a direct channel into better understanding where the asset is in terms of its current usage and deployment. And then finally, at the end of the term, we want to dive into a topic like, as we call, maximizing the vehicle and customer lifetime value. So subscription and rental alternatives, where you use those new business models to delay the resale of the vehicle or avoid the wholesale pricing altogether. And then another one is also to fully exploit all remarketing channels, of course, through a multi-platform play, and even using your digital end-to-end and omni-channel platform to really make it a more interesting topic for your customers and deploy the dynamic pricing models and other things. And finally, of course, there's an analysis of asset condition and the link to the behavioral analytics that you can also extract out of the asset through monitoring of the lessee, and also helping them into the next asset and keeping therefore loyalty up. Now, I want to have a closer look at two of these topics. One is, of course, that's very dear to my heart, which is the topic of subscriptions. Get more flexible. Offer these non-ownership models to your customers, because they will ultimately delay the selling of the asset after its initial life cycle, and they will help you maximize the vehicle lifetime value. Now, whether we call it subscriptions, whether you want to call it medium-term rental options, all these measures are keeping your customer in your ecosystem. They're requiring much lower financial commitment, and they attract new customer cohorts like Gen Zs. And they also offer the option to switch to a new AV model, for instance, as technology develops with flexible lease terms. That also decreases the risk on the consumer side and will potentially also help them adopt the vehicle much more quickly. Another option is also to become a multi-brand lender in the pre-owned space with a special channel to focus on highly profitable F&I products. That's another way of balancing out your portfolio. And again, our recommendation is always, use digital technology and platforms to go direct to consumer where the regulatory ecosystem allows you to do so. And of course, another one that I wanted to take into more focus is the topic of quantitative solutions, where we're supporting the next generation of asset management, meaning a data-driven business intelligence platform. Because what we see is we can help you maximize that customer lifetime value and that asset lifetime value by using the data that are at your disposition throughout the various channels, throughout your various platforms that you're using. And one of the key requirements, of course, and to start off with, is that you have a unified data architecture. You have to have a 360-degree view of your portfolio assets, So you can deploy a multi-KPI platform that aligns all of the overarching business targets, financial and otherwise. The second step would then be to use a deep learning model to predict the next best mobility use case, because you're finding yourself now in a comprehensive business intelligence platform that allows you to extract the data necessary to do that. And then, of course, in order to constantly go into this loop of an optimization, of an optimized business model, you are conducting sensitivity analyses, through RV forecasting, enhanced market intelligence, asset condition, utilization data, and really collecting the data that's necessary. And then you deploy it also along the various platforms, your sales people and your dealer network, and wherever you get across the omni-channel platform to get in touch with your consumers again by having a personalized product offering, having a product recommendation engine that you can deploy, and dynamic pricing opportunities as well. So in the end, you want to be able to determine the best timing and the best allocation of your asset for the next cycle. Now, Eric, you're probably wondering, how can you do that?
Of course. How?
Of course. How? Yes, what you need to do is to have, first of all, a computer that works. Okay, great. The next generation of asset management in play. Now, that next generation of asset management requires a platform that is built on the latest technology. And the latest technology means that you deploy microservices, that AI and ML are one of the functioning features, or one of the founding features for this type of platform, that it's completely based on open APIs, it's cloud native, and also it's headless, meaning you can deploy any type of front end as well. And you can, with the help of an orchestration layer, redeploy all of the various components according to the business flow that you have, according to the business model and the operating model that you want to deploy. So we can finally allow any type of experience on that platform, whether it's a short-term mobility, like a sharing or a rental experience, whether you want to have a financing or leasing option, a subscription option, or a pay-per-use model, even for commercial vehicles, or if you want to create a marketplace and a peer-to-peer setting. All of that can now be composed solely on a number of components that are being rebundled in a way that all of the functionalities that you see here can be deployed. So whether it's the front end with customer onboarding and management, in addition, it would affect the middle and back office with an asset management platform with all the functionalities that you usually see in any type of contract management system. That is now being pushed into a new kind of platform. And how it could look like is something that I just wanted to show you on the next slide. Various components on top here, whether it's called Flex or Index, it's a calculation engine, a programs and rates engine, whether it's a document generation engine or a credit evaluation engine. All of the features that you need are being recreated by combining the various independent components of this type of a platform. And then you can recreate everything that you're used to. But the one thing that is now really guaranteed is that your platform remains up to date, because every single module will always and constantly be updated to the newest one. So you no more will be running in that topic or in that problem of having an outdated platform or having a legacy 90s platform or whatsoever. We can now create a technology that allows you to do A/B testing, to do to rearrange the various components in the way that you are once you decide to have a different business model all over in place. And that really gives you all of the data that you need to create a smart business intelligence hub. All right, so that's everything I wanted to share with you. And now, do we have any questions?
Awesome. Thank you so much, Eva. If anyone has any questions, please feel free to drop those into the Q&A section. I'll be moderating those. But I'll kick it off first. Eva, in your opinion, what does the future hold for the EV industry in the US?
Yeah, so very, very, very interesting question. So let me start by saying in the last month, we saw as the number 3 OEM producer in terms of volume, BYD. And of course, that's because of the China market, and that's because they're strong. But they came in number 3 after Toyota and after Volkswagen. And I think that's already somewhat of a predictor. I know that the US is now, creating all of the relevant barriers to make sure that none of the Chinese auto manufacturers are entering the market anytime soon. But I can tell you this, even with the upcoming elections, the Democrats we know are all for EVs, but even if Trump, will have Elon Musk on board, he's probably also going to drive the whole opinion towards a more positive one regarding EVs. So I think in any outcome, it will benefit the auto market and therefore also the consumer market, and potentially create new subsidies in that market. So finally, we see not only the early adopters taking over, but really it's going to be a mass market phenomenon.
Awesome. That's great. And you mentioned BYD, and I know the Chinese automakers are expanding globally now. Do you see them entering into the US market anytime soon, or do you think that that's a ways out?
Well, it really depends. I mean, the tariffs are now making sure that it's becoming very costly for them to enter the market. But with NAFTA in place and them pouring massive investments into creating now production facilities in Mexico, for instance, it's going to be only a question of time until they can very cheaply probably enter the market. And we know from the let's say danger that they have now in reality created in the European market, where they have come in strong and already represent more than 12% of sales in Europe across all countries. These vehicles are very good, and long-term quality-wise, I mean, it's going to be something that also consumers would like to have. So let's see. But of course, it's an industry topic. It's an economical topic, I think, across all Western countries. And the question is like, how can we prevent them from, becoming a danger to employment and to the many of the large dynamic industries that are driving the wealth, also wealth creation in the US as well as also in Europe.
Great. Don't see any other questions at the moment, but if anyone else has any, give you one more minute here, and then if not, we'll wrap up.
Yeah, if we were able to intrigue you maybe in learning more about that latest technology that I was talking about in creating these front end and back office systems, we're always here to for any questions you might have and for any deep dives you would like to walk us through. Happy to be there, both in Europe as well as in the US, and hopefully to see you all also at one of the next conferences, and particularly, of course, the one that AFSA is going to conduct in October.
Excellent. All right. No other questions have come through at this point. So thank you so much, folks. We really appreciate your time today. Oh,
Yeah, thank you so
we just
much
had one
for
from Con.
having us. Thank you, Eric. It was fun.